Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading. And that's going to be for the 25th of the month, wrapping up on a Friday and coming into a close of a very good week of trading. Lots of volatility, and that is exactly what I love seeing in the markets. Now, before we jump on in, as always, let's make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up with us on our email list, so you'll be notified every time this video comes out. Along with that, in the newsletter itself, we talk about all kinds of different stuff, cryptocurrencies, options, futures, stocks, you name it. It'll show up in there at some point in time, so it's a great newsletter to get your hands on. Along with that, make sure to swing on over and click on the live Trader subscription and trial info if you haven't done so already. This will let you sign up for a 3-day trial in the live trade room with us, where you can sit down with us for a couple days, see our screens, see what we're doing every day, how we're approaching the markets, the trades that we're taking. Just a really great way to hang out with us for a couple days and see what we're all about. You can also ask questions. It's a full open room, so you can ask questions, chat with other members. It's a really fun time. So make sure to do that if you haven't done so already. Of course, if you do enjoy it, you can sign up for a monthly or weekly subscription to the live trade room specifically, or if you want the full Monty, you can sign up as a VIP member and you get everything, including the live trade room, as part of the package. Now, taking a look first off on the future side of things, we have the euro. Now, the euro is not really accomplishing a whole lot by the end of the day. We can see that we opened up over here, and we're going to be closing here. It's a really shallow, lackluster kind of day. Not much going on, not a whole lot to really worry about in terms of movement, and just a lot of wick back and forth. The daily chart's going to have a bunch of wick on the bottom, a bunch of wick on the top. Not really much of a decisive candle. Now, that said, inside of this move, we do have a nice little ascending wedge forming that we are attempting to break out of the lows of. And if we zoom out a little bit, we can see that this is still grinding in the bull channel, but we're running into a little bit of a lower high, right? We have that lower high edging across price down through there, and that's giving us a clue that, well, even though we are in an area of support and resistance kind of rising higher with a bull sentiment, they may be looking for a slightly deeper correction. Now, given the deeper correction possibility, we'd really just be looking for the market to return back to the area where they found value before. That's going to be around 7,700 down to 7,500 or so, and that's last time we were there, we rocket shipped out of there. It wouldn't be a surprise at all to see them, if they do want to turn lower, tap that area and find buyers to shove the market right back up again. Now, the overall movement that we are getting, we have a strong area of resistance just above us, so if we do want to continue the market a little bit further up, a very large area of resistance is right above us at 18,300, 305 in that area, and really that would make a lot of sense. Given the range sentiment so far, a failure on the highs would make a lot of sense, even though that is going with the trend, with it breaking out to the upside, it would still make a lot of sense to see them bounce off of that and then look to turn higher. So either way, we have an area of big resistance above us at that 8,300 level. We do continue to the downside, looking to buy sub 8,000s. I would love to see some buying pressure underneath there, and of course that one that we were just talking about, zooming really far out, I would love to see it collapse down to around 7,600. 7,600 and some change would be a very nice potential long-term buying area to jump on in and hang on for a little while, maybe for some of you Forex traders out there. Overall, though, we are in a range. Buy low, sell high, stay out of the middle, and right now the euro is smack in the middle of the range, so we can't do anything until the market comes to us. Over on gold, we have a range-bound market as well. Zooming out, generally speaking, we've been in a range for quite a while. That hasn't changed. We've had a nice ascending wedge grinding higher. We've had a descending top coming down. It's giving us just the market pinching together. It's not breaking out of this area. And if the market wants to get some legs in one direction or another, they're going to have to pick one of these sides. Likely when you have a falling and rising where you end up with just kind of a flat triangle, you typically get a fake out breakout of one of the sides, and usually that side is against the overall prevailing trend. The problem with gold is there isn't really much of a prevailing trend right now. If we zoom out to like a 30-minute chart, it's pretty obvious that we're bullish, but you've got to go really far out to see that bull trend, and looking at a 5-minute chart, well, it's kind of non-existent. So although I would like to say a fake break of the lows makes a lot of sense, and then look to buy for the upside, I can't really put a whole lot of emphasis on a big move because we could easily just smack right in top and turn back down again. So really just looking to play this as a range for right now, given that there isn't that much of a strong prevailing trend as a backbone to use. So right now we are in a range, like we said, buy low, sell high, stay out of the middle. We're kind of towards the bottom edge of the range. We're not quite there yet. We are testing rising channel support coming off of these most recent lows, but I would really like to see them retest 1290. We also have weekly support at 90.3, which of course going into Friday, weekly support becomes more important because we are at the end of the week. So those areas are a little bit more interesting, and I would prefer to see buying pressure going back along with that bigger trend, even though it's almost non-existent. I would still rather lean on the buy side. If the market does want to turn back higher, we have a large area of resistance above us at 95.2 and a shallower area of resistance at 93.8. So really just looking to play the extremes, buying low, selling high, and staying out of this middle, and right now we are still in the middle if we are edging towards the bottom just a little bit. Over on crude oil, quite the fall from grace here, getting hammered down off of the highs. Very interesting just back and forth battle that we have going on. We had that massive rally to the upside. They took it all back. Looked like they were going to take it back to the upside, and that ended up just failing through the top and then collapsing back down again to a new low. We haven't contested that low yet of that bigger rally, and that area is the area of interest. If you were to look at this giant rally to the upside, those extremes up there, 48 and 90, if we make this really, really thick so we don't lose sight of it, let's make that a thickness of 7. That area at the highs, and then looking at the lows, this area on the lows, 46.94, those are big locations that we need to keep our eyes on. Now, a couple shallower ones, of course, will be these minor little breakout attempts that they've tried to do. But for the most part, I really want to see what they do if they can test that bigger breakout point, and that's going to be at 46.94. The overall movement is obviously heavy, heavy bear side, but they've given back quite a bit of that drop lower going into the afternoon session, and well, this may just be an excuse for sellers to find a slightly better price, but the one thing that really has me concerned here on a big further leg down is simply the fact that we've taken back 40% of the move down from today, and that's all happened since 1 o'clock. So it only took, 4 hours or so for them to get it done, 3 hours at this point in time, to take back. Well, it's a pretty big deal. So given the fact that the buyers are still holding this market, I don't feel comfortable selling yet. Basically, we do know that this is a bear market. Sellers may just be looking for a better price, whether it's at 47.74 or whether it's at the highs again, especially given how back and forth this is. We need to look for a little bit more in terms of proof. If we see them test this area, it's not good enough on the first test, early to the party, like we always say, for them to turn down and then take the initial sell. That's not good enough. In this type of situation, what I would really like to see them do is bounce off of it to prove that it's there, have them try to come up, make a lower high, and then turn down again and look for that area instead. Playing it a little bit more conservatively, especially with how kind of back and forth we've got going on right now. This market is, we've got a big spike down, big spike right back up. On the bigger picture, we've got a big spike up, down, it's all over the place. So with that whipsaw going on, we need to play it a little bit safer on crude. So I'm looking for selling pressure off of 47.74, but not taking the first attempt. I want to see them secondary attempt that level before I start looking for the short side. Major objectives to the downside, 46.94, where then in the long term, we may even be looking for a possible buy bounce. And then finally over on the S&P has a lot going on today, but not a whole lot in terms of a trend. We opened up right there, and we're going to be closing right there. And a daily candle is going to have a monster wick on the highs and a monster wick on the lows, and that just leaves us with a big ugly plus sign for a day, and that is a doji on the daily chart. Now if we zoom out a little bit here, we can see that we do have a longer term bear bias after that big drop down in the 17th, but for the most part the buyers are still kind of contesting this. We have a potential descending wedge, maybe a descending channel as well if you widen it out just a little bit. For the most part, if the sellers really were that interested, why can't they even test the lows of this? Where are they? So they're just not showing up to the party. That means that they could just be losing conviction. And noting a little bit further left here, we have a big chunk of resistance that broke above and we can use as support. I'm definitely eyeballing this area floating around 33.5 or so, and that's definitely something that I want to keep my eyes on, mainly just due to the fact that, well, I mean, look at the amount of resistance that came in there. A nice little double top, a retest, they tried it again, it tried to break out, failed, came back, retested his resistance, tried breaking out again, failed, went back down, tested his resistance, they broke out, used it as support. chances are 33.5 is going to be a pretty big level of contention if the market can come back around and retest it. So we are in a range. We are looking to buy low, sell high, and I would love to see a buy bounce off of 33.5. It fits really well for that range scenario to go back up towards the highs. If they do want to rally higher out of this wedge, we have selling resistance at 48.5 just above us. And really, in this kind of environment, even any of these shallow swings could potentially be areas of interest as well, depending on how you want to approach them. So at the moment, looking to buy low, sell high, stay out of the middle, and unfortunately for the S&P, just like a lot of the other ones, we are right in the middle. Now, taking a look at the economic calendar for tomorrow, we have a decent amount of stuff. Tomorrow at 8:30, we have the core durable goods orders month over month for July, forecasted at 0.4%. Previous was only 0.1%. Also at 8:30, we have the durable goods orders month over month. At 10 o'clock, we have Federal Chairwoman Yellen speaking, and that is a big deal. You really, well, generally, you don't want to do a whole lot of trading when she's coming on the microphone. She can definitely throw things around a little bit. And if that wasn't bad enough, at 1500 rather, in the afternoon, 3 o'clock, we have ECB President Draghi speaking too. So not only do we have Yellen on the microphone, which is usually a big enough event, but we also have Draghi, which is another big enough event. We have a lot of big speakers on the docket for tomorrow, so we have to play it safe. So like we always say, make a plan, trade the plan, follow those rules, and you should be all right. Now, for you cryptocurrency traders, make sure to stick around because we are going to jump on into those next. Now, the cryptocurrencies, so far looking at Bitcoin, we are catching a little bit of a bounce back. Now, that said, we still haven't gotten that nice pullback that I've been waiting for and honestly kind of hoping for. I really wanted to see that pullback down to 3850, 3800s, somewhere down there. Just never got it. They just continue to rally to the upside. So with this massive bullish pressure still edging in on the market, it looks like we may have a small little channel forming here, and not to mention the fact that we are kind of coming into a little bit of an area of resistance that they're breaking above. The buyers are still very aggressive. So instead of looking for all the way down at 50 or 3800, which I would still love if it dipped down there, may have to get a little bit more aggressive and start looking closer to that 4020 area, 4030 area, because, well, the buyers just aren't letting it fall that far. So in terms of aggressive buying pressure, I would love to see a dip down to around 4,000 so that we can buy in and push the market up once again. We are getting a little bit of a wedge up here, so you know the overall movement, it definitely feels like it's due for a correction. I would love a dip down and then a rocket ship right back up to new record highs to finish off that 4,500. Over on Bitcoin Cash, we're still migrating a little bit lower. Not really a whole lot going on in the 60-minute chart. Very, very wedge bound so far. We're not getting a lot of good run to the downside, but we're not really getting a whole lot of run to the upside either. We're just kind of dealing with a flat-bottomed wedge and descending resistance on the highs. Now, in all honesty, this is a beautiful place for a long-term potential buy, with buyers buying into a big dip low, pushing into that 0.14 area, and that is definitely an area that we've been talking about of interest. So at this point in time, it is a really nice-looking potential opportunity to the long side to buy in and push the market back up towards those highs. Intermediate target, probably just shy of 19,000s. Final objective is going to be back to those highs towards that 25,000 mark to see if they can finish it off. If they do want to continue dipping lower, in all honesty, what I would really like to see here is for the market to overexert itself. Just do one big dip lower, buy into it aggressively on that low, assuming that that breakout down is going to fail, and then look to push the market back up from there. Either way, though, everything looks really strong to the upside, and we are sitting on an area of interest for a longer-term hold. On Ethereum is a little bit grindy. We're grinding higher. We're finally coming in towards the bottom of that channel. We also have the cluster of moving averages all coming into play in the exact same place. Lots of stuff stacking up in the same area here, not to mention the previous swing highs on top of everything else acting as potential support. Now, we are very, very choppy here. If we zoom out, we can see that this is an extended downtrend. It's been going on for quite a while now. So really, this move that we're getting is another one of those situations where preemptive buying early on structure, with the channel coming in through the bottom, previous swing highs coming into play, all the moving averages stacking up, I can definitely see a potential kill zone for interest on the buy side to push the market back up towards the highs, but I also wouldn't be very surprised if this broke down and tested the lows once again. If that is the case, we got to zoom really far out and look at historical prices, and we can see that there is a big chunk of support and resistance coming into play just a little further down, not too much further, just above that 6,000 mark. for the buyers to try to push in. So if it does dip lower, we can definitely see the buyers are starting to prop the market up. I would love to see a quick little dip to very cheap prices if they want to give it to us. Otherwise, a shallow short-term buy back up towards that 9,000 area is next on the list for Ethereum. Over on Litecoin, big old rocket ship to the upside. Any of those buys that we were talking about in the middle here, I mean, clearly hit the targets on that monster rally to the upside. Given that just blow off of the highs, it's very similar to what happened earlier in the year when Coinbase announced that they were going to start supporting Litecoin. They had that monster rally up. It was out of nowhere, completely flat price action before that. Little pullback, rallied up, little pullback, extended a little ways, but eventually it kept grinding its way higher. Every time we get one of those sharp corrections, it usually goes the opposite direction. So although I would love a potential buying opportunity here, I have to assume that given all the other times we've seen one big move, it usually takes it back. So in that case, I'm looking for a possible channel low buy that's a little bit further down, around 1106 or so, 11.6. If we can get a little bit of a further dip down, buying below these most recent lows would also look really good around that big round number at 1,000. And of course, if we zoom really far out, we can see that that does also coincide with big support coming through here. So long-term buying down here, short-term buying, and maybe a small little channel at play just a little bit above that. Long-term buyers, though, they're looking back to those highs, and we got plenty of room to go, looking for pretty much a double up in price off of that bottom from 1,000 to 2,000 on the rally up there. And then finally on one of our little add-on markets here, BSD. BSD has seen some huge rallying to the upside, and overall, the buyers definitely look like they mean business here. They've done this several times before, and looking historically, every time they've had a big rally to the upside, they had a quick little pullback and continuation up to a near high, right? And that's important because every time, a big correction, nice little pullback, near high. It didn't break back through those highs. So what I'm looking for here is a near high. We're sitting on top of an area right now at 12,841 for a push back up towards a near high. I'm not looking for them to break through, but looking for a buy right around where price is currently, up to right around that 15,000 mark to kind of finish off the job. So a shallow little move of about 3,000 Satoshi to the upside, and that's kind of what we're looking for here on BSD. So that's going to wrap it up for the cryptocurrency side as well. Hopefully everyone has a great day of trading. Hopefully everyone had a great day of trading today as well, with some okay movement out of some of the index markets. But like we always say, whether it's the cryptocurrencies, the futures, stocks, whatever you trade, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.